Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast presented as always by Tusk Media. Before we get started, go ahead and check us out on Twitter, twitter.com/Tusk Media LLC. At the very top of our profile page, you will see a pinned tweet because we're doing a big fundraising contest this November. As you can tell, growing out the facial hair, freshly clean shaven right now, but in about 10 minutes, probably by the time this video is done, you're going to start to think I look scruffy, but we're doing the no shave thing. At a minimum, we're growing mustaches. Everybody in the office, myself, Ben Nye here, intern Barrett, even Scotty Galliani coming in, clean shaven. So we'll have to get a clean quote of the day from him sometime soon. But we're doing that. We're raising awareness of men's health issues, raising money for it. If you go to that link, you can go to our entire team page, and then you can click on individuals, and you can show some love. If you really think Ben's doing a great job, maybe donate on his page. If you think I'm doing a good job, donate even more to my page so that I beat him. But we're going to have a lot of fun with it. We'll do some updates, and you can watch our really, really awful facial hair coming in. I'm Andrew Hall, Ben Nye. We're going to be talking about Facebook today. So Facebook reporting earnings Wednesday after the bell. That's November 2nd. They're going to be reporting earnings. So we'll just kind of jump in and look at some of the major themes, some of the factors coming into play, and then at the end, kind of talk about our expectations and what we think we're going to see. But the first thing I think we got to talk about really is users, monthly active users. It's a term we use a lot, especially when we're talking about anything kind of in the social media world. But Ben, I know you've got a lot of data, but what's kind of the expectation? What are you seeing? What are you looking for?
Yeah, monthly active users and daily active users as well. It's an extremely important metric for Facebook because obviously revenue is based off of how many users you have and how much you can actually make on a per user basis. So those are the two functions in order to get you to the revenue number. So if you're doing a model in Excel, for instance, you first need to get the number of users. The interesting thing is the saturation point. Right now there's 222 million users in the US and Canada. Crazy. Last year at this time there were 210, and that had increased by 2 million sequentially. So if we're looking for another 2 million this year, we're looking for about 224 million in the US. And we'll talk about why we focus on the US later on, but in short, it's because that's where Facebook generates the vast majority of its money. The US revenue per user is substantially higher than any of the other geographies.
And as you start to look at numbers and you start to think about the US and that saturation point, which I think is perfectly fair. I mean, I would almost say that we're at a point where I think we're almost starting to see demographics use Facebook less. You know, we've talked about some of the social media networks that are more popular, so to speak, with younger people, and Facebook's on the list, but not necessarily sitting on its throne at the top of it.
Yeah, and I think if you guys are looking for perhaps one big number that you can get out of this quarter is that about 1.7 billion users worldwide. Because last quarter they were at 1.65 billion, and then they've been increasing that by about 50 million a quarter. Sometimes it's a little less, sometimes it's a little more. So it'll be touch and go whether they hit that 1.7 billion, but you could get some headlines either way.
So if they get that, you get the growing user base. The next thing that's important, again, because you're making money per user, so your users, obviously, more users the better if you're Facebook. But the other thing that is arguably the bigger story now as we continue to see the maturation of this business is really the average revenue per user. Ben, talk a little bit about what that is, how it's derived, and what they're kind of trending at.
So if we're doing a little bit of a diagram, you have revenue, and that's broken into revenue per user and the number of users, and then below revenue per user, that's you have how frequently are they actually viewing it, and then what's the monetization on a per user basis. So on one hand, you need how frequently are they going to the website, the timeline views, if you will, and then you also need just how many are there, and how many ads are on that timeline. What's the ad load? Facebook has been increasing the ad load for the last couple of years.
Quite noticeably, I would say, as a user.
Quite noticeably as a user, and then also from the financials as well. However, they are decelerating that So they're bringing that growth rate down. So it has some people talking about, that's going to decelerate the growth in average revenue per user if the ad load is going to decline. Facebook, to its credit, says that right now they're not seeing a decline in user attention because of that increased ad load. But I have to say, as a user, from a user perspective, I start to get irritated with just the number of ads that I see that are disrupting the experience.
And I think that's one of the things that Facebook would probably tout as a success. We maybe view differently as users again, and we should mention we are shareholders of Facebook. So if it's a success for Facebook and it actually fleshes out in the numbers, then we're more in favor of that than our own personal enjoyment of the site. But at the same time, one thing that I think we're starting to see a transition for, and I've got a little bit more data from this source, but it's just the amount of advertising that's being allocated to video as opposed to image. And when you start thinking about Facebook, you start thinking about the advertisements you see, the majority now really is starting to be videos. And we've got some different data that I'll touch on in a minute from an actual ad supplier, so basically somebody that helps people place ads on sites like Facebook and elsewhere. And you're really starting to see that transition, especially in the mobile space. If you rewind 2 or 3 years ago, the idea of watching a mobile video ad within a Facebook timeline was foreign. That just didn't seem logical, didn't seem like it would make sense, but that's becoming
and it seemed like it would take so much bandwidth that the phone couldn't handle it, or the data supplier wouldn't be able to handle it.
And so you get that, and so now you kind of start to think, okay, well maybe they are, leveling off, so to speak, on the ad load, but if on mobile they're able to still command a really premium priced to advertisers, when they're able to actually collect that money, that could offset some of that slowing growth rate, so to speak, in a number of fronts. And it does almost become kind of a multiplicative effect where you do have a bunch of factors. It's a relatively simple model. How many people are on here, how many ads are they seeing, how much do the ads cost? But all those variables can be tweaked. And, I think that's why look for the big numbers of users, but more importantly, drill down a little bit more to see what those users are actually, how they're benefiting Facebook.
Right, and as you look forward, there are levers that are easier to pull than others. So for instance, if user growth is very strong, but ad load has declined somewhat, that's a sign that, there's another lever that Facebook management can pull. They can increase the ad load. If you're seeing users fall and ad load increasing, it's like they're going to reach a saturation point where they just can't put any more ads on it. So that kind of defines the growth profile of the business.
And that in some ways, on the other side of that stick, take the exact opposite of this story really with Twitter, for instance, where the biggest story that everybody talks about and focuses on is slowing growth of monthly active users. They're having the hardest time growing the user base. Facebook can continue to grow that, which thus far they've been able to, especially internationally. They've still got a lot of runway, I guess, in that regard.
They do have some runway, and then it gets to a point of, how much is an ad worth in the United States, and how much is an ad worth in a country that is poorer, because people might spend less money in one of those poorer countries.
So a little bit on ad spends, and I'll jump in with some of this. Nanigans is a site that basically places advertisements. So imagine Tusk Media says, hey, we want to advertise for Tusk Media. We're going to record a 30-second commercial. It's going to be awful. Our mustaches are going to be in it, all that good stuff. And then we're going to give that content as well as the click-through links that we want to use. So the idea that, hey, when you click on this, you go to this place or that place. You go to our podcast, whatever it may be. We would give that to Nanigans, and then they would basically go all over the place, Twitter, Facebook, Instagram, you name it, and place those ads for us. So some data coming out from them regarding third quarter and their own clients. So they place about $600 million in ad spending a year. Their top 20 e-commerce and gaming spenders saw a 26% increase in return on average spend. So if you think of this like you're us, like you're Tusk Media, and you're advertising this podcast, we are probably going to be happy if we see an increase in how much we're getting. So basically your ROI, your return on investment, in this case the ROAS, return on average spend, is going up. So for every dollar we spent last year, we're now getting a little bit more, about a quarter more than we were a year ago. And because of that, a big factor was obviously you're getting a better return, but they saw a 250%, actually 249% increase in year-over-year spending by those people now. This is one company, and this is their top 20 advertisers in one space. That's a sizable increase.
Right.
It also kind of lends itself, or maybe supports the theory of a larger ad load, more video transitions. Again, video advertisements, I do think, are more engaging. They are more likely to inspire click-through. So kind of makes sense that you have a premium there and that they would cost more. So you've got that. They've also seen quarter-over-quarter increase of 16% in spending from online retailers. So they're seeing some things that certainly trend positively for Facebook. Again, you don't want to read through too much, but that does, I think, kind of tell the story of what Facebook's wanting to accomplish. So then it really just comes down to, can they accomplish it? And you think they're on the right track? What's the next steps for Facebook and growth?
So, and we'll probably get some backlash from this comment that I'm about to make, but I'm actually cautious on the stock. So we are long, but definitely the accounts I manage are underweight relative to the market. And the reason is because I do think we're reaching a saturation point in the US and Canada. We're at that kind of 65% market share where it's just difficult to grow much more than that. And what we're seeing as well, although ad load is increasing, we're seeing price per ad decelerate. So just kind of going back last 5 quarters to second quarter of 2015, price per ad was up. This is on a year-over-year basis, 220% in second quarter of 2015, 61% third quarter of 2015, 21% fourth quarter, 5% first quarter of this year, and then popped up a little bit to 9% into the June quarter of this year. So watch the price per ad, watch the ad impressions, because while that was happening, ad impressions went from negative 55, negative 10, 29, 50, 49. So you are seeing that ad load increase while the price per ad has decelerated. It's still growing.
But not at the same
rate. Yeah.
Yeah, and I think that's something to keep an eye on. And I think when you start looking at this and you look at saturation, you look at the cost of ads.
Right.
I think a great way to think about this and why we might not be quite as bullish as other people on the stock, even though there's so much room for growth, is almost to ignore these terms that maybe are almost social network specific in terms of monthly active users and the ROA of ad costs and all that kind of stuff, but almost think about it like it's any other business. If I were to go to you and say, hey, this business that has the largest margins, it's stalling out, or the growth is slowing, but it's got all these other businesses kind of tied to it that don't make nearly as much money, they're still growing, you're probably going to have concerns that, hey, this one portion of this business, this one single operation that is the most profitable, it's slowing down. And that's kind of what you get there. The ads in the United States in that demographic and that location are much more profitable for Facebook.
Right.
They're worth a lot more, and we're starting to think that may be slowing down. And the other thing, you mentioned it kind of as a lever and that they can pull in terms of loading up on ad load. I do think eventually you get an ad saturation point, and I think you will start to see that actually affect user numbers.
So just to give you an idea about how much different in terms of profitability the U.S. and Canada is versus the other geographies. So just using first quarter 2016 as an example, U.S. and Canada average revenue per user was $12.43. Europe was $3.98. And you think, they might be a little closer.
The most comparable, I would think.
Asia Pacific was $1.56, and rest of world was 91 cents. So
you got one product making you about $13, nothing else making you more than $4.
Exactly.
And that $13 product is slowing down.
Right. So, and then if we look at the analyst projections for the next number of years and what's happened in the past, we're seeing that tax rates have been a big support for Facebook. Facebook was paying a 35% tax rate back in 2014. That tax rate has steadily gone down. Now, Apple, Google, other tech companies do pay lower tax rates. They pay around the 24% tax rate range. So you are seeing that come down. So in 2015, tax rate was 34%. This year, expected to be about 28. And then you can project forward kind of a stair step down from there to around that 24% over time. And management has been, clear in this. They have said, we are going to see that tax rate decline closer to peer averages. But that is a lower quality number, lower quality earnings number. And as we talked about levers earlier, again, you're talking about we're approaching times where they have fewer levers to pull. I mean, if the tax rate is already now down at 28% versus 35% 2 years ago, that's 7 points of tax rate that they can't harvest.
Yeah, and that's one of those things I think you get with kind of these more techie growth companies in general is the audacity of the unknown is very promising early, and as a company matures, and to Facebook's credit, it's matured quite nicely and it's done very well. So don't think we're saying they've mismanaged this, but as you start to know more and more about what you can and can't do and what works and what doesn't work, some of that limitless potential, so to speak, does start to come into perspective.
Right.
And we may be starting to see some of that.
And we had a great discussion of kind of the ups and downs and the potentials and the negatives for Facebook a couple months ago when we really talked about this in depth. So I know we've talked a lot about kind of my more cautious stance, but there are some ways that I could be horrendously wrong. And that's never happened before, of course.
Horrendously wrong. You heard it here first.
But there are some opportunities. For example, they could expand geographically more. They could accelerate that growth in other countries. Maybe that regulatory risk that could be a potential in like China and some of these other countries about Facebook getting data. Maybe that regulatory risk kind of goes away, and they see expansion in users, and they see expansion in revenue per user of those non-US members of the site. And then also they have their other products. So they have Instagram. Are you an Instagram user?
I enjoy Instagram. I probably use Instagram more than I use Facebook.
And that's what we're hearing from a lot of people. WhatsApp as well.
Yeah, which I still don't really know what it is. I feel like I ask that about once a month. I'm like, WhatsApp again?
Yeah, it almost seems like WhatsApp is their international solution. To the extent that they're not being able to really penetrate on Facebook, WhatsApp is their solution to that. And then they also have the virtual reality, the Oculus Rift. So there are some growth opportunities. Plus there's growth opportunities that I don't think they've even tapped yet. Their Snapchat competitor hasn't really come to the fore yet.
I think Facebook Live is a real catalyst.
Facebook Live is a catalyst.
We talked a lot about that a little bit, Barrett and I actually, when we talked about Twitter and how Periscope, which I think is a better platform, was just leapfrogged by Facebook Live like that. I think they've done a great job of getting really good content on there. So they're kind of drawing in the right type of broadcasters. That could be huge. I mean, I don't think it's out of the question to say, hey, Facebook Live could be a legitimate content provider with premium subscriptions and things like that within the next year or two.
Well, I mean, and you can even talk about it becoming a YouTube competitor or even a Netflix competitor. Maybe if there was Facebook Movies and there was just a one platform, you could watch movies that your friends were watching and you could experience that together. That's a bit of added value that they could provide. They could do Facebook Pay, like have a currency. So just whenever you're dealing with 1.7 billion users, I mean, there's been no company in history that has had that exposure. Maybe 3M with a Post-it note. But beyond that,
nobody's watching movies on those things. They're real slow. You got to draw them out and flip through.
So that's just screams potential. Will Zuckerberg be able to get to those spots before competitors? He's done pretty well up to now.
Yeah, and I think another thing to keep an eye on too is just the global economy. I mean, it seems like things are growing at a snail's pace, if that. And I can't help but think that's some of why the average revenue per user is so low, even in Europe, for instance. To be under $4, a lot of that tells me, okay, advertisers aren't really ponying up money like the United States is. Whether that money is well spent or not, we're not totally sure, but we do see some evidence, that at least from one ad supplier, that says, hey, they're getting a better return than they were a year ago. So maybe that's something that if the economy does swing upward, whether it's now or in 2 years or 3 years or 10 years, maybe you do start to see a little bit of an uptick in terms of what people are willing to spend, how valuable those eyes become, because as consumers have more and more discretionary income and they're more and more likely to engage with some of these videos and then actually act on the products. I think that's where you could also see an uptick, and that's one of those things that's very hard to predict, very hard to account for. But you almost would think, given recent history, that we're probably there's been much more easy times to grow that way.
Yeah. So then, do you want to just hit on the numbers? So we're looking for 97 cents a share. That's what Bloomberg analysts, the consensus estimate is 97 cents per share in earnings, and $6.92 billion in revenue for the third quarter. The revenue is an increase of 54% year over year, which sounds fantastic, but they did grow 59% previous quarter. So again, phenomenal growth, decelerating though. And then if you look at the EPS number, they're looking for 97 cents, which is an increase of 71% on a year over year basis. Last quarter they did grow at 94% year over year. So you're seeing a little more amelioration in the tax rate as well as part of that. So
with one of these things, and we talked a lot about earnings and kind of the expectation playing into that, what is the EPS number that you think actually moves the needle, if there is one? You know, because part of me says, okay, well, if they come out at 105, that's great, and that's certainly going to be viewed positively, but I think there's going to be data underlying that's much more important. Yeah. Is there a number that you think, just as a blind EPS number, that could come out that would, hey, that's the number to watch? If there is one, let me know. If not, you know, what's the number one data point people should be looking at?
I mean, it's the type of thing where if they really kill the EPS number, that'll be just
that'll be really a byproduct of all of it.
Yeah. So like if they came out with $1.25, for instance, people would get all of a sudden on the Facebook trade.
And that would certainly imply growth in everything that we've touched.
Yeah. What I think is that, you know, watch the revenue number first and foremost. Watch the ad load. Watch the price per ad, and watch the number of users, especially in the United States.
So a strong revenue number with maybe some weakening in ad load would certainly be a positive.
That's
the home run.
Yeah.
That's kind of the home run scenario, because again, more levers on the table to be pulled.
So watch the conference call, listen to the conference call, because that's where you're going to see the commentary about all these other things that we've been talking about, the ad load, price per ad.
Yeah, absolutely. And we'll probably do a reaction video, talk a little bit about it, whether it's a standalone video on Facebook or not. It may be kind of in one of our broader market updates. I know we've got a lot of updates coming this week. We're going to hit First Solar, also reporting Wednesday afternoon. Anything else that's standing out?
I'm really excited about the going back over the ideas.
Yeah.
We had a bit of a discussion in the portfolio manager meeting yesterday afternoon, kind of coming to conclusions on that we can bring to you with a little more thorough analysis after we've had the weekend to digest what we heard.
Yeah, so big conference that we were at last week, lots of ideas, lots that sounded great, maybe after a little work, not quite as good, but we're gonna kind of share our findings on all of that bit by bit. Hit subscribe whether you're on YouTube or Seeking Alpha or listening to this on iTunes. Thanks for being here. Check out Tusk Media LLC on Twitter. Donate to our Movember fundraiser. Y'all have a great day.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.